Hi, Matthew and subscribers. My name is Bob Katsiouleris. I'm the Chief Executive Officer and Managing Director of Andromeda Metals. I joined the company April 1st of this year and pleased to announce setting a new enterprise value for our company, a new pathway forward via our updated DFS, which we just issued. And our deposit is located, really the last Great White mineral deposit is located in the Eyre Peninsula in South Australia, and happy to tell you more about it.
Great. Good to meet you, Bob. We've not met or spoken before. I think we're dealing with Mr. Marsh before you. So tell us a little bit about you. Where are you from? What's your background?
Yeah, Matthew, I'm Greek. Was born in Montreal, Canada. Raised there. Spent parts of my career in the U.S., China, Chile, partly with Rio Tinto, Nearstar, Rusal, others, and spent about half my career in industrial minerals. So excited to sort of come full circle and really be part of this industrial minerals opportunity here in South Australia.
Okay, and what's the brief? What was your brief? What have you been brought in to trying to do? Obviously, clearly the DFS was sort of well underway before you arrived, but what's the company hoping to get from you?
Matthew, really the key focus is commercializing the project, right? Is really understanding, where we want to play, when, with whom, and why, and really understanding the value and use of this unique deposit. We looked at a lot of different segments. We looked at paper, we looked at plastics, we looked at fillers. We ended in and settled on, high-end ceramic porcelain tiles with a very, very unique value and use, very high value, and porcelainware, right? Which is a result of the very high halloysite mechanical strength that we have in our product. So very rigorous piece of work and really underpinned the new valuation of our company and a lot of commercial and market interest in the products.
Right. Okay. And we'll get on to the commercial bit in a second. So I guess you better hit us up with those DFS numbers that you seem quite pleased with. What do we need to know?
So look, about a 70% increase in value, just a little bit north of $1 billion. A steady state run of 130 million EBITDA. Really an excellent product portfolio, lower operating costs, lower capital costs, good mining costs, and fully permitted and shovel ready in terms of where we're at. So we pulled all that together, and it was a really, really good lift to the valuation of the company, but more importantly, a very clear pathway to commercializing, such a massive deposit in that part of the world.
Okay, and maybe now's the time to talk about the kind of commercialization component, because where I want to go is, how do you pay for this thing? Where's the money coming from, etc. So, with regards to the focus, you're talking about this as being the Great White deposit. In fact, let's start with that. What's Great White deposit? What do you mean by that?
Well, Matthew, it's a kaolin deposit, right? So there are few, if any, kaolin deposits left in the world above 36% alumina. The one major deposit was located in Ukraine. Of course, with the geopolitical crisis, a lot of that material has come off the market. So it's just us and very few others. More interestingly and importantly, there are no other 36 or 37% deposits announced coming forward. So it's a unique wet minerals deposit that could be in the tile, on top of the tile, in porcelainware, has great color, great chemistry, great mechanical properties. And it exists in South Australia with probably another 100 million tons to the north of us and another 100 million tons to the south of us. So we're really building an industry, right? It's an industry in the Eyre Peninsula. So we're very excited about that.
Okay, and so the market that you've decided to go for, Asian ceramic tiles. So we better try and understand a little bit about the size, scale, and opportunity of that. And if you don't mind, I'd love to actually understand which MOUs, LOIs, or contracts you've actually got in place at the moment.
So Matthew, what we did was a key part of our strategies. We said, look, these tiles, these large format, wall tiles and exterior and interior tiles, very expensive, very high end. They are formulated almost exclusively in Spain and Italy. So we validated our product in that market, right? So if you can imagine all those formulations for these high-end products that can be made in Southeast Asia, China, Japan, and elsewhere, but the home of the formulation, the digital printing, the technology is in the Mediterranean. So we launched a very aggressive, very engaging program with select partners to validate, test, and establish the value and use. What's the price point? What's the value of this Australian kaolin in your tiles? Where would you use it? Do you use it on the glazes? Do you use it in the tile? And we completed that work, and it really generated a lot of commercial interest, both from the European side, both from the Chinese side, and both from the Southeast Asian side.
Okay, but you validated it in the Mediterranean, but you are aiming for the Asian market?
Absolutely. Southeast Asia, China, Japan are going to be our home market. We'll continue to have a part of our production servicing the Mediterranean because we want to be part of the existing and new formulations, right? You see these tiles coming out all the time. They can look like wood, leather, textiles. It's incredible what the digital printing technology can do and how people are using them instead of dimensional stone, instead of wood. And we're happy to see that we not only are benchmarked against the best industrial minerals in the world, but there's also an opportunity for us to replace certain minerals that are significantly higher value in that value chain. And that's what we're working on currently.
Right. So are there any contracts in place at the moment?
Yes, we have an excellent tier one porcelain contract with probably the leading distributor of porcelain minerals in the Japanese market. Typical, dinnerware, porcelainware, Noritake, these brands. We're very pleased to have that in place. We have a big part of our Chinese business with FG, which is a tier one distributor producer also of equipment in this market. That's in place as well. And most interestingly, we have a letter of intent that we're hoping to finalize here at the end of September with probably the leading formulator of industrial minerals for tiles in Spain, in the Spanish and Mediterranean area, which is Ibero Clays, a very important partner for us. Also did the majority of the benchmarking for us. And so we're looking forward to wrapping that up at the Italian Ceramics Show, which will be held in Bologna this year, the 25th through the 29th of September.
Okay, so obviously you've kind of got to go through a phase of proving to them that you're actually going to be able to build the thing, get into production, and deliver to their specifications. Can you tell me a little bit about that journey, which is going to get you to a point where you can get binding LOIs, binding contracts with a value attached to them? So what are the phases you've got to get through?
So the last phase of the work, Matthew, will be wrapped up by mid-September, right? And this is an understanding of exactly how the product, what kind of value does it create on the surface of the tile, the center of the top. All that will be wrapped up by 2 independent studies that we're doing in Spain, and that will be shared with a variety of different customers who we're in discussion with. But as we're discussing price points and value, that's the type of work we want to lean on. Kaolin is not copper, it's not gold. You can't go to the LME, see a price point. You really have to establish that value and use yourself, right? And then discuss that depending on what type of tiles are being made, so forth and so on. We also have a second group of products that are exceptional for decarbonizing cement with unique rheological properties. There's such a big push on carbon footprint and decarbonizing, a big part of the cement sector. Big issues in Europe with carbon credits, but even here back home, low fine cement, low carbon cement, rheology modifications for our building products and creating a lower carbon footprint is a key area of focus for the entire building sector. So we're participating in that, and that validation is sort of one step behind where we are in ceramics, but also a key part of the value and the enterprise valuation of our company going forward.
I understand. So I guess what I'm trying to get at is in terms of if you've been brought onto the kind of commercialization component of this, I'd like sort of line of sight as to what you would view as a successful process, because you're new, you've got to establish yourself. People have got to test your products, get comfortable with it, and then you've got to obviously ramp up the supply to those relationships and continued relationships. So how do you view, just sticking with the ceramics for now, how many people are you going out to? What are the size of the contracts that you would expect to do initially before that kind of ramp up kind of kicks in?
Matthew, we're about 70%, 75% committed for stage 1A, which is our first phase. We have probably interest for, I would say, at the 50% level for at least another 50 to 60,000 tons, which is our target for stage 1B. And so that's the piece that we're working on right now. We realize that, when we grow our company to 150,000 tons, we will be, essentially freeing cash, 42, 45% margin business, and also potentially self-financing and self-funding from that point going forward. But from now until that point, we have to get the first 60,000 tons up and going. We have to fund that. We have to prove out all of the existing contracts that we have and start laying down the framework for the future.
Right. And are you looking at, again, just coming back to the market, because you're right, it's not gold, it's not copper, it's not nickel, it's kaolin, and it's probably less understood. But so the market, you say you have to kind of define your own metrics in terms of the price that you want to sell at and the margins you hope to achieve. So are you displacing current suppliers, or is the market growing and there's this kind of there's a supply gap that you're inserting yourself into? I mean, can you tell us a little bit about that?
Two key factors, Matthew. The first key issue is, with the absence of Ukrainian kaolin, and a big portion of that, especially in the Mediterranean, clearly there's a supply gap there. There's also a very big supply gap in China, as the halloysite-based kaolins are completely depleted. So there's a supply side issue, right? But at the same time, right, the demand side is growing by 3 to 5% CAGR in real terms, compounded annual growth. So we have that component as well. And what that's allowed us to do is we look at the kaolin market, high-end part of the kaolin market, maybe 2 million tons, right? The contestable market for a product like ours, is a market share of about 30, 35%. So you have about 500,000 to 600,000 tons that's there that we are uniquely qualified and validated to participate in. And we just like to get there one step at a time. And that's our plan.
Well, that's what I mean. It's just, when companies sometimes come on here and they think that they're going to just take over the market. I appreciate that kind of conservative and realistic approach from you. And with regards to the cement component, obviously trials important, then adoption, and then again trying to get that ramp up there. What portion of your future revenues are you assigning to the cement element?
So our cement, our
concrete,
cement
I should talk about. Is it concrete? I'm conflating slightly there. Apologies.
Cement, if we're just to look at that, if we look at that piece, there's probably a piece in there early on that's 35 to 40% part of what we're planning on doing. And to some extent, Matthew, it depends, right? Is it going to be just as a rheology modifier, right, to reduce the amount of water and coarse mix? Is it going to be more upfront in the process where it has a bigger impact on low carbon? One of the things I like to tell people is, look, kaolin's been used in ceramics for 25, 30 years, right? So as you enter into that market, people know what kaolin is in terms of its applications into ceramics and porcelainware. We are just starting that process in cement and concrete. It's so difficult. It's not difficult. It's challenging when you work with established companies, right, who have established recipes for building structures, to work with them to consider a change in recipe, a change in approach that gives them lower carbon, but still the strength that they need to certify and be safe. So it's been a journey, but I think we're making very good progress. And typically, rheology modifiers sold as minerals into cement and concrete, Matthew, sell at 3 to 4 times a premium to industrial minerals.
No, I understand. I worked with it before. I guess, therefore, can we expect you to be looking for strategic partners with their own kind of distribution network, whether they be brands which kind of sell into different jurisdictions or other? And if so, would they be coming in just at the as a product distributor, or could they come in as a strategic investor into your organization if they felt that was appropriate? Are you open-minded to that?
Yeah, we are. And I think that to some extent, Matthew, depends on the market. Here in Australia, we have an existing agreement in place with IMCD, world-class distributor of chemicals and industrial minerals. We have a very firm commitment from them to distribute these products into the cement and concrete market. We are working on the validation piece. They will work with us on the distribution piece because, as you can imagine, it's a relatively small volume, high-priced product that is ideal for distribution. Having said that, when I look across to the European market has a very liquid carbon and a CO2 credit market. You can imagine cement, concrete producers over there, the amount of money they have to spend in carbon offsets that they have to buy in order to continue to operate. We've never factored that into our equation. We haven't factored that into our DFS. And you can imagine once we're fully validated and growing here in our own market, what that value of this particular product could be in markets that have a liquid carbon exchange or a carbon border adjustment mechanism, which is just going in place in Europe. All of a sudden, the value of that product increases dramatically.
Right. Okay. So look, and I appreciate you can't get into too much detail on commercial sensitivities around some of the numbers with conversations that you are having, but you are going to need to have I guess, a firm grip on that if you're talking about moving into FID and getting funding in place.
Yeah,
so in
absolutely.
terms of those conversations, are they advanced, or was it kind of a case of subject to the DFS numbers coming through, or are you starting now from fresh?
No, Matthew, they're pretty well advanced. And we're pleased with the progress, and we're keen to bring that to the stage where we can advance in commercializing that product. It's going to be a very, very important part, and it's not only complementary, right? It actually can become a core part of our business. Fits very well with our ceramics business. It's the same plant, the same technology. So a very key part of our focus here in this quarter.
Right. Okay. And can you just give us a sense of the timing of this? Because obviously, if I look at the numbers of going back to the release, you talk about this, the capex numbers required there. I assuming 60-40, debt to equity ratio here. So, who are you talking to? Strategics? Are you talking to banks for the debt, or and the equity? There's I imagine a few solutions around that, because at $100 million company, you don't want to make too many kind of dilutory decisions. So what are you kind of imagining, or how are you imagining this getting financed?
So Matthew, we're I would say advanced, very well advanced on the debt side. We had the debt data room open since June. Appreciating as you invite people in to take a look as debt providers, just understanding Kale and the technical risks, the markets, the rest of it. I mean, it takes time. To the point I mentioned before, it's not gold or copper. But I always maintained at the time that we opened the debt data room, I said, look, we're not really going to engage either cornerstones or strategics until we have the ability to properly reset the enterprise value of the company and make sure that we're having a proper discussion, right, based on value. Although, of course, people will want to discount that value that we presented, but at least the rigor and the discipline is there. So there's interest on that side as well, and we're I would say, advancing those discussions at the same time. And we're focused right now on wrapping up the debt component. I think for strategic funders, at the end of the day, it's an opportunity to get in at the beginning of building an industry, right? So we're talking about 60,000 tons with a mining permit for 300,000 tons on a 20-year mine life, which represents probably less than 1/10 of what we have to the north and to the south of us, right? The deposit to the south, Matthew, is better quality than what we currently have. We're drilling it out currently, and to the north, who knows? So it's sort of like an industry, and it is, you can argue, as much a marketing project as a mining project because it's so consumer driven. But the growth, right? The growth in terms of consumer demand for tiles. We look at the crystalline silica issue, the Australian government's decision to ban dimensional stone, including granite and others. High-end porcelain, high-end tiles. exterior, interior, Southeast Asia, consumer preferences, the absolute admiration of white, clean porcelain tiles, what we call Iter Blanco, and just the cultural acceptance of that. I think, when you're looking at 3 to 5% compounded annual growth rates, when you're looking at pricing that's in real terms, 3 to 4%. And when you're looking at the Chinese market, that is structurally in a 400 to 500,000 ton deficit, I think those are all the leading indicators, both from a macro and micro side, that strategic investors and to some extent retail investors would definitely love to latch on to.
Right, and so let's look at what your expectation is in terms of the reaction from the market. Obviously, you kind of put the DFS out. I think it's well received, but that necessarily hasn't converted into share price appreciation for you. So do you think people are waiting for the announcement from you that you've got your financing in place, or more contracts? I mean, what do you think is going to kind of move the dial, as it were?
My own view, Matthew, look, we saw we're somewhere between 15 and 20% from the announcement of the DFS. Having said that, to your point, I think right now people are saying, look, we understand the story. We understand the commercial strategy. Rob, you've been talking about that for the last 4 or 5 months. We validated those products. We see each other on the backside. Having said all that, I think right now, it's about funding. It's about assurances of funding. And it's about, that first piece, which is, a debt provider that provides that base of the pyramid for us to essentially bring it home, right? And I think that's what the market is looking at. Appreciate also this time of the year, it's reporting season in Australia, and maybe we're not getting the coverage we should be getting. But having said all that, really at the end of the day, I think it's about finishing off that first piece, finishing off that validation, bringing all that together, and providing the clarity and the transparency both to our existing and new investors to see where we're going to go next.
Right, and so just very, I'm just trying to sort of address some of the concerns that people have kind of sent in with us, which is when you talk about Asia focus, you're talking about broad Asia. This isn't a China-only solution for you guys, presumably. Is that right?
Yeah, look, the architectural tiles in China are actually a very small part of the market. It's a very, commodity market. It's the kind of tiles you would buy at Bunnings or a hardware store. It's not really our market. There's 5 or 6 large, big architectural players. We're happy to participate in the Chinese market. And this is why we chose a distributor for China. It's such a huge, segmented market. It's almost a 10 to 11% compounded annual growth rate for kaolin in China. But imagine in medical, pharmaceuticals, all types of small end uses that you really need a distribution channel. High-end porcelain, mostly Japan, tiles, frits, and glazes, Southeast Asia will be the focus. And the key thing here, Matthew, is that a lot of the plants that produce those tiles, frits, and glazes in Southeast Asia are Spanish and Italian multinationals or licensees of Spanish and Italian multinationals who are formulating those recipes for those plants back home. And that fits very well into our strategy. And we're keen to...
So can we expect to see the funding, debt, and otherwise, whatever alternative solutions you've got, coming out of Australia or Europe, or were you looking up to Asia?
We have a lot of interest. Obviously at home here in Australia, but also I would say also in Europe. I think the European piece is driven to some extent just by the geopolitical issues, right? Could be also foreign exchange is kind of favorable as well right now, especially if you're a European investor with the Aussie dollar. So we're on both sides of that. I'll be over for the Italian ceramic show in September. We'll be visiting and conducting several investor days across Europe, really to meet investor demand. Right? It wasn't part of my plan, but there's investors and producers and customers who would welcome a better explanation, introduction of who Andromeda is.
Okay. So from that sense, it'll be probably conventional debt. You're not looking at strategics per se, but they would be welcome if they are keen. In which case, I'm wondering how do they feel about the kind of ceramics versus concrete mix of the company going forward?
Yeah, it's interesting. We have competitors here in Australia, very successful companies. WA is doing a great job. But they are essentially wall clays, lower quality in paper, plastics, and paint. And people are always asking that. They say, "Hey, how you're not participating in those markets, right?" So part of the challenge, Matthew, has been educating people, right? Educating investors, customers, stakeholders, shareholders. Our own key partners in Streaky Bay, and Pulchura, and the Eyre Peninsula, just for them to understand exactly what we're talking about. And I think whether you're talking to an institutional investor, a retail investor, or someone in a small town that's wondering what you're doing, at the end of the day, kaolin is not something that's very well understood. And that's part of the challenge we have, today, but also the challenge we have going forward is making sure people understand, what's the value here and what's the use and why is it so interesting and why is it so unique compared to all other industrial minerals. We produce a lot of zircon in Australia, right? People know a lot about it. Lucas had an incredible success story. There are other juniors that are doing very, very well. Ultimately, we'll be in the same space with zircon, but no one's ever heard of kaolin. So that's
I think
that's
that was my yeah. Well, I think that was my point earlier in terms of the market. I'm talking about the investor community. The industry obviously knows about it, but I guess you have that lucky phase now where you'll simply judged on revenue, not necessarily an understanding of what the underlying commodity is. So I appreciate your time today, Bob. That was a good insight and good to kind of catch up with the company again. And best of luck going forward.
Hey, Matthew, thank you very much. Thanks for your time and all the best to you and your subscribers. Thank you. Appreciate it.